I do believe that Bitcoin is going to crest the six-figure mark. It's going to be over $100,000 at some point later this year. That's my belief. And so what I believe is that over the course of this year and next, we're going to see a lot of institutional investors get their head around this and start establishing 1%, 2%, 3% positions in this, in Bitcoin. Only caveat to that is if we do run into a hard downturn economically here, which I believe is a distinct possibility. It's a distinct possibility that we have some sort of event here where you have a washout of some sort of financial or institution that wipes out and takes down a number of institutions with it, or threatens to in an act of contagion. In that case, I see us having steep drop off and then a V recovery, because again, go back to the other first principle, is the treasury market must stay liquid, and they will print to make sure it does. So if it does dip down from here and we have a sharp drawdown, I believe that would be a buying opportunity, because I do believe that the Fed and the treasury will come back to the rescue and print more money, and they'll print more than they ever have before in multiples of it, because they have to keep this thing liquid. So that's the only caveat. That's the only question. And how long that takes, when that happens, anybody's guess. I do believe there will be volatility in Bitcoin, but I believe that volatility will continue on the upside. And that's why I'm so excited about the opportunities ahead.
Bitcoin will hit $100,000 by the end of 2024. There is only one thing that could derail this, and that is a sharp downturn in the economy and the blow-up of a major financial institution. This is the latest prediction out from James Lavish, a renowned macro investor. In his latest interview with Sam Callahan, James foresees that over the next few months, we're going to see all major financial institutions and investment houses increase their allocation to Bitcoin, ranging from 1% to up to 3% allocations. James predicts that it's this institutional adoption that will push Bitcoin up to over $100,000 per coin by the end of the year. Make sure to stick around to the end of the video, where James breaks down why the only thing that could stop Bitcoin is a sharp economic downturn and why it's a real possibility. Also guys, if you enjoy finance content, consider subscribing to the channel or liking the video. It's free and you can always change your mind. But before that, today's video is brought to you by crypto.com. If you still haven't got a crypto card yet, you're living in the past. With traditional cards, you have to pay annual fees, they take percentages, and some banks charge you at every transaction. That's not the case with the crypto.com Visa card. With the crypto.com Visa card, you can spend your crypto anywhere you want, and the benefits are insane. With your crypto.com Visa card, you can earn up to 5% back in Crow rewards on every transaction, enjoy 100% cashback on Spotify, Netflix, and Amazon as a new customer for the first 6 months, get complimentary access to airport lounges and elevate your travel experience, and flaunt your style with the sleek and stylish metal card. Now, Crypto.com is currently giving out a $25 new user sign-up bonus for Jamie Tree viewers. Here's how to get your $25 bonus and start earning up to 5% back. First off, download the Crypto.com app by clicking the first link in the description or scanning the QR code on screen now. Second, sign up using our referral code nutty for your instant $25 bonus. Thirdly, once you've signed up and have been approved, here's how to get your Crypto.com card. Tap the card tab at the right of the navigation panel, select your preferred card tier based on the required cardholder Crow staking or lockup amount. I personally have a Ruby Red card. The only requirement is you lock up 400 USD of Crow for 180 days, which is then unlocked. Then accept terms and conditions. And you'll have to have sufficient Crow in your crypto wallet for the 180-day stake or lockup. Finally, submit your delivery address. Then you'll get your Crypto.com Visa card, start making transactions, earning rewards, and enjoying the perks. So to claim your $25 bonus and earn up to 5% back on all your spending, click that first link in the description to get started with Crypto.com today. Now, back to the video.
The money printing that we're talking about printing money with QE, basically, in times of distress. And when you see a real fast expansion of the money supply. And what's really important about that is that that's what adds to inflation. We've seen it. We've seen that, how it exacerbates inflation. That's what we're talking about here. Fed goes out and they commission banks as intermediaries to go and buy bonds in the market for them, both treasuries and mortgage-backed securities, and they'll go and do that, and then the Fed just kind of presses a button and enters reserves on their balance sheet to pay for them, so then they can pass that through, and it's just money entering the system that wasn't from there prior, and so it expands the money supply. You can see see the expansion of the balance sheet of the Fed and the expansion of the money supply kind of go lockstep. And then there's further on, and we didn't talk about inflation in this thread, it was just about the money printing, but you can see a delayed effect where inflation starts to hit after the expansion of the money supply. So that's what's so important to understand about it. And so they basically can just print money. And they've said this before. They've said it on 60 Minutes. They've said, we print money. That's what we do. So we'll never default. Why won't we default? Because we print money. No sovereign that issues debt in its own currency would ever default. Why? Because they can just print money and buy their own bonds. Look at what Japan is doing. They're doing the exact same thing. They've been doing it for years. And so they're running into issues with it, but that is exactly what's happening. And so that's what we have ahead of us. So I think we have continued perpetual structural high inflation. And the reason we have that is because we must have liquidity in the treasury markets. And that means that we must maintain liquidity across the economy and across the markets in order to maintain that liquidity in the treasury markets, because we're not going to cut expenses. We're already spending more than are legally bound with mandatory expenses and with long-term contracts with the defense contract. And then just the interest on our debt. Interest on our debt is $1.1 trillion right now. It's ridiculous. You don't have to be a math genius to see that's not sustainable. Like, we have to do something. And so that's kind of where we're at. And that's why the money is printed, because when we have these times of shock, we cannot have the treasury market act dysfunctional. Like, it has to keep functioning with high liquidity. That's why they enter the market and they buy the bonds in order to splash liquidity into the markets and make sure that the engine just keeps running. Bitcoin has this has been a very positive development with the ETFs being approved, the spot Bitcoin ETFs being approved, and for institutional investors to begin to buy this thing without having all the operational issues that they had prior to this. Really important development. There was not a flood of capital I expected more capital to come in quicker, but the reality is that these institutions, they're taking a long time to get their heads around this and to understand it and to get the regulations internally around it. And so they're going through their period right now, that 90 to 100 day period, they're just tripping that mark where they're getting comfort with it. That quiet period is kind of over. They see that the custody is working, whether through Fidelity or through Coinbase, that BlackRock and the other issuers of these ETFs are maintaining strong correlation to the underlying. There's very little slippage there. And so those have been really positive developments. A lot of capital has come into the space in these ETFs. And so that's really important. Going forward, Bitcoin, we must recognize, like we said before early on the show, is that Bitcoin is still looked at and seen as a risk-on asset. It will continue like that until it doesn't, until there's enough capital in the space and until there's really enough understanding in the space about it, and institutional investors really understanding what it is and why they should hold it in their portfolio in a separate allocation. That's paramount. For this asset to grow beyond where it is now, it has to get out of that risk-on asset mindset. It will eventually, in my opinion. It's going to take more capital and continued growth and understanding across all of these different types of investors. And so what I believe is that over the course of this year and next, we're going to see a lot of institutional investors get their head around this and start establishing 1%, 2%, 3% positions in Bitcoin using these ETFs. And some of them will, especially family offices and hedge funds, perhaps smaller institutions, will get their own ability to buy Bitcoin without having to use the ETFs, which will just expand on that. And that will mean that they're getting great comfort in it and understanding around it and getting comfortable with the risk of actually owning it themselves. But I think that that's going to continue. And so we're going to see this kind of trickle right now of institutions. We're going to turn that's going to turn into a kind of a stream and a flow, and then a steady flow. And just like a steady flow, a river of money that's coming into the space as these institutions get their head around it. Because like I said, they're going to take a 0.5% to 1% position. They'll stare at it on their sheets every single day until they decide whether they want to sell it completely or make it a full position of 2, 3, 4%. That's where we're headed. And so if you think about it in those terms, just go back to first principles. That just means that more money is coming into the space, that Bitcoin's price should rise accordingly. And to whatever multiplier you want to put on it, all talks about multipliers, but whatever you want to put on it because of the liquidity that's there now, I do believe that Bitcoin is going to crest the six-figure mark. It's going to be over $100,000 at some point later this year. That's my belief. Only caveat to that is if we do run into a hard downturn economically here, which I believe is a distinct possibility. It's a distinct possibility that we have some sort of event here where you have a washout of some sort of financial or perhaps insurance or something institution that wipes out and takes down a number of institutions with it or threatens to in an act of contagion. In that case, I see us having kind of a steep drop off and then a V recovery because, again, go back to the other first principle is the treasury market must stay liquid and they will print to make sure it does. So if it does dip down from here and we have a sharp drawdown, I believe that would be a buying opportunity because I do believe that the Fed and the treasury will come back to the rescue and print more money, and they'll print more than they ever have before in multiples of it because they have to keep this thing liquid. So that's the only caveat. That's the only question. And how long that takes, when that happens, anybody's guess. I do believe there will be volatility in Bitcoin, but I believe that volatility will continue on the upside. And that's why I'm so excited about the opportunities ahead. This is not going away. This is real. It has underlying value. It's being adopted and it's starting to be understood a little bit better. We have a long way to go, as you and I both know. We fight that battle every day, but it's encouraging. It has shifted, and the way it's shifted, Sam, is that the conversation has gone from the hard line from most of the Wall Street institutional investors that Bitcoin doesn't have any underlying value to, oh, this is interesting. And I can see why it's something interesting to trade. And so they're dipping their toe in it. But what's important about that is not that they understand it yet, because by and large, the people I talk to on Wall Street still don't understand it fully. And that's okay. It took me a long time too. There's a lot of mental resistance there when you're part of a system that benefits you so well that you're looking at something that's completely different. It's very difficult to get your head around. But that said, what's happening, and it's slow, the institutional adoption is happening, and you can see it in the ETFs. The ETFs make it super simple to buy these things and to buy Bitcoin, because prior to this, you really couldn't. If you were an institution, it was very difficult to buy Bitcoin. And the reason for that is just it was operational difficulties. It was career risk, it was personal risk for people, for investors and portfolio managers to stick their head out, stick their neck out and say, I'll buy some of this. I'll take the risk. I'll hold the keys. It was very difficult for them. And then you'd have to have a lot of approvals internally to get to the point where you could actually do that. Whereas now with the ETFs, it makes it very simple. You can buy it with the same broker on the same exchange that you normally do, that's regulated. It's not an unregulated exchange. You can settle it with the same prime broker as you always do. You don't have to have a different prime broker. You have a custody with that prime broker and you DTC it. So it's all settled and held in the same way as a regular investment. And it's marked the same way on the New York Stock Exchange time. It's so these questions are all settled, they're answered, and it makes it super simple. You just buy it just like any other stock. There's no margin on them right now, as we've come to learn, but it's the same exact thing. So it's kind of that risk of sticking your neck out and buying it early is shifting now. And so what you're seeing is people say, well, wait, what about this thing? And it's forcing them to do a little bit of work on it. And it's very easy for them to just go and get a small position. And we call that legging in. You leg into the trade, you get a small position, and it forces you. You say, well, it's in my portfolio now. Every day you pull up your portfolio, it's right there. It's staring you in the face. You don't have a choice, but you've got to go look at it and say, do I want to add to this or take it off? Because right now it's just an annoyance. It's a 0.5% position. I got to do something with it. And so that's kind of where we're at, where you've got a few institutions, a lot of hedge funds are trading it. You've got a few institutions that are starting to get in there. But really, Sam, what I think is going to be the big catalyst is now we're bumping up against that period where the institutions that have bought the ETFs, they have to publicly disclose that. And we're going to start seeing some institutions publicly disclose it. And it's not because, and when they disclose it, that's not going to be like, oh, wow, look, the Cleveland Fireman Fund owns some Bitcoin. That's what it means is, oh, look at all of these institutions and these professional investors that have bought this thing. It's kind of turning where I better do my work on this because now I'm getting behind. They all own this thing. I don't even know what it is. So that risk of buying it has flipped to the risk of not buying it. We're still in the stage, as you know, that people consider this thing in Wall Street and typically across the nation, they consider this thing a risk on asset. And that's going to take a while to change that. But this is the beginning of that. And that's what's really important about it.
So there's James Lavish on why Bitcoin will hit $100,000 per coin before 2024 is out unless we see a sharp downturn in the economy. Despite the lackluster price action we have seen over the last month, Bitcoin is still on track and is playing out very similarly to previous cycles. However, one thing that investors need to be wary of is a huge economic downturn. Before we go, a quick reminder for those who are keen on staying updated in the fast-paced world of crypto and Bitcoin, consider subscribing to our daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis trusted by over 60,000 subscribers for insightful crypto investment information. Click the first link in the description to join our community and elevate your crypto investment knowledge today. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.